Hey everyone, Matt here from Confluence Trading, and welcome to the first lesson. This lesson is going to be basically just an introduction to what day trading is, as well as how to set realistic expectations for yourself and best utilize this course material. So we'll start off just by going over the outline for the course today. I'm going to teach you guys, again, what I think day trading is and some misconceptions about it. We're then going to talk through realistic expectations for your trading career. And then finally, I'm going to walk you through how I think you should utilize this course to really maximize your learning potential. So it's a lot of good information. Let's get into it. All right, so I want to start by just leveling the playing field. What is day trading? What are we talking about? Day trading is using market auction signals to predict and profit from short-term price movements, okay? So there are tons of misconceptions out there about day trading, and I've listed kind of the three that I hear the most often here, but there's tons more. The first is that you need to understand fundamental analysis, right? You need a financial background, you need a degree in finance, you need to be doing discounted cash flow analyses on these companies. And all of that stuff is fantastic for investing and long-term trading, but you really don't need that to be a successful day trader. The second is that it's extremely risky, right? It's just gambling. And this just isn't true if you're doing it right? There's plenty of people out there that are just YOLOing their entire position into a single stock. They're trading on Robinhood. They're buying GameStop at the absolute peak of its kind of meme parabolic move. And that's just not what day trading is if you're doing it the correct way. Third is that this is easy to learn and execute if you have, quote unquote, the right strategy. I think that's the thing everybody wants, right? They come to your channel or they try to learn from you, or they pay for the course that somebody's selling because they want that perfect strategy that is going to take them to the top. And the reality is that doesn't exist, right? There's tons of great strategies out there, but that doesn't mean you can just learn them and immediately execute them, right? This stuff takes lots of practice and lots of time to get good at once you actually learn that material. Now, there's a couple cornerstones to trading that are true and that I want you to really kind of start sinking into your mind as soon as possible. The first is that you're using well-defined strategies with proven win rates, okay? And proven win rates is key. You're going to be back testing, you're going to be journaling, you're going to know that you have an actual edge in the market. Second is you're using fixed risk amounts, right? So one trade, you're risking $10, the next trade you're risking $10, the next trade you're risking $10, not, risking $500 one trade and then $1,000 one trade and then $50 for the next trade, right? You got to maintain consistency in the amount of money that you're risking. And then third, day traders are all cash at the end of the day, okay? And that is critically important. You do not hold overnight as a day trader, okay? Because at that point you become a swing trader, and that's a very different ball game. So here's some stuff, again, that day trading is, stuff that it is not. We've leveled the playing field, and now we can get into realistic expectations. So the first thing I want to talk about with realistic expectations is the Dunning-Kruger effect. This is a super interesting, and in my opinion, kind of funny cognitive bias where people with low ability or expertise, right, they tend to think that they're experts. And they certainly overestimate their ability or knowledge in that area. This is extremely common for new traders, and it's kind of graphed out visually as this green line over here, right? So, as a new trader, maybe you take a couple of really excellent trades right off the bat, beginner's luck, and you reach what we call the peak of Mount Stupid. And I love the peak of Mount Stupid. I think that's just a great way to put it, okay? And then inevitably what has happened to most of these traders is that they immediately start turning this around and losing money. And they double down on their positions and they hold overnight and they make these critical day trading mistakes that you shouldn't be making. And you end up in this valley of despair down here, okay? And that's where most new traders quit. And my goal with this educational program is to, I can't get rid of this curve altogether. You're going to get to the peak of Mount Stupid. It's just going to happen. But my goal for you as kind of a first-year trader is to have a much lower, much less high peak of Mount Stupid, a much shallower valley of despair, and to reach kind of this plateau of sustainability much faster. And so I think that if you utilize the methods in this course and you temper your expectations appropriately, you will be able to follow the path of this blue line as opposed to kind of this emotional roller coaster that leads to a lot of people quitting in their first year. So now what I want to talk through is kind of a roadmap for what your first 2 years of trading should look like if you follow a systematic approach like the one that I'm going to be teaching you here. So in the first 1 to 3 months, you're really going to just kind of be focused on finishing this course. You're going to be trading only in simulator, and you're going to just try to be picking out as many different strategies as possible so that you can kind of get a feel for what your style as an individual trader is. Expect to lose money, right? You should be in sim, so it shouldn't even be real money, but don't expect to be profitable in that first 3 months. Then from 3 months to 1 year, you'll probably transition from simulator trading to a mix of simulator and live trading, or entirely to live trading, depending on your comfort level. You'll want to narrow down your focus to kind of just 1 to 2 strategies. And in that first year, you hopefully, again, should be break even or barely covering your costs. But if you're negative, really don't feel bad about that, because most people are negative in that first year just because they're trying to overcome kind of the psychological hurdles of learning to trade. And you should have a very well built out journal that you should be utilizing to refine these strategies that you've narrowed your focus to. From 1 year to 2 years, it's really all about scaling up your risk, okay? You want to be, hopefully at this point, consistently profitable. You want to have very few like max loss or Hulk days, and you generally want to be completely final on which strategies you're actually trading. That is all going to eventually lead to you kind of continuing to refine your strategies and move into the, profitable years of your day trading career. After 2 years, again, you should have some level of consistent income from this. Hopefully at that point you're able to kind of branch out to other strategies and bring them into your playbook, right? So I started with 2 strategies, and now I can trade probably up to 4 or 5 really fairly consistently. You'll have a really good gut feel for the market because, again, you've had all of this screen time, right? By 2 years, you should have several thousand hours of screen time. And then, again, you're going to continue learning and continue journaling every single day. I journal every single day. I have been trading for years. I have been investing in the stock market for decades. Every single day I learn something new, and every single day I continue to add to my journal, add to my statistics, and make sure that I'm maintaining an edge in the market. The last point that I want to hit on just expectations in general is around the PDT rule and what you can expect to make as a full-time trader. So first off, the pattern day trader rule, the PDT rule, is applied to anyone that executes more than 4 round-trip trades in 5 business days, okay, while utilizing a margin account. Now, this margin account point doesn't really matter because it's almost impossible to day trade in a cash account anyways, and if you had enough money to do that, you wouldn't be worried about this rule. But basically what the rule states is that if you're flagged as a pattern day trader, you must maintain $25,000 in your account basically at the end of each day. And if you don't do this, you will be banned from taking additional round-trip trades until you've brought that account balance up to $25,000. Now, I know a lot of you out there are hearing this and probably thinking, oh my goodness, well, I don't have $25,000 to day trade, so I should just give up. No, this does not mean that you should give up, but what it does mean is that you need to focus on learning, right, and educating yourself. If you're in college or if you're saving up money to try to get to that 25,000 mark, you can spend, years simulator trading and just making sure that you are perfectly consistent there. And then when you have the money to go live, you can do so. Now, I will say that there are ways around this rule. So you can utilize an offshore broker, which comes with its own risks. You can also trade other instruments like futures. But the reality really remains that, earning potential comes hand in hand with your account size, right? It takes money to make money. That old saying is very true, and it's very true when it comes to day trading. So I put together this quick little table over here that just kind of shows you, potential earnings. Let's say you were risking $50 per trade. There's about 252 trading days in a year. If you made 2R every single day, which again, R is kind of the risk amount, so you made $100 every single day, you'd be making $25,000 a year, right? And you can do that math and scale based on kind of what your account is and what you think you could personally do. In my opinion, within the first 2 years of trading, being able to kind of average somewhere in the 0.5 to 1.5 range within the first 2 years is very doable. How much you can risk per trade is going to, again, depend basically entirely on your bank account and how big that is. So that's your future earnings potential. Now let's get into how we utilize the course. All right, so now we're going to cover how you can utilize this course to kind of optimize and maximize your path to consistency. So the first thing I recommend doing is just watching this course all the way through, beginning to end, taking notes, making sure that you're internalizing and learning the material. I know there's a temptation to skip straight to some of the strategy stuff and videos that you might find a little bit more interesting, but I promise I did this all in the order that I did it because I think that's the best way to learn the material. So once you've watched the entire course, open up a simulator account and start to trade live for about 2 months while you focus on sections 1 and sections 2, okay? After about 2 months of trading in sim, I want you to rewatch section 3, and I want you to really trade as close to kind of treating it like real money as you possibly can from a psychological perspective. Okay, don't trade live, but again, just treat it as if this is 100% real. Once you've finished that 3rd month of simulator trading, again, kind of rewatch the going live and the psychology sections and spend that 4th month trading very, very small amounts of money and revisiting the coursework as you need to. So that's how I would approach it. Again, I designed the course, so I'd like to think that I know what I'm talking about. But for sure, at the very least, try to watch this all the way through one time before you go and trade real money. All right, that brings us to the end of our first lesson. So at the end of each of these lessons, I'm always going to do just a quick closing comments. Today's closing comments are really just focused around, making sure that you enjoy your first 3 months, right? You're learning a new skill. It's exciting time for yourself as a new trader. Rewatch the course as much as possible, learn as much as you can in these first 3 months, and just enjoy the fact that you're learning something new. Pair with that, though, some realistic expectations. It's not an easy skill. This is not going to be a short journey. If you become discouraged or if you just feel like you need some other people to talk to stay sane, consider joining my Discord, which is linked in the description below. And again, just talk to us because we've all been there, right? We've all had max loss days. We've all had days where we don't follow our rules. Trading alone can be very discouraging. So consider joining our community below. And then finally, please keep your losses small in the first year, okay? The only way that you get to consistency is staying in the game long enough to learn enough and to have enough experience to get there, right? If you risk your entire account on one trade, or you again have a max loss day where you liquidate half of your account, you're not going to survive the first year. So above everything else, above all the expectations, anything else, just try to keep your losses small and try to survive that first year, and you will make it. So with that, have a great day, and I'll see you in the next lesson.